It's Thursday, the 10th of March. The ECB has spoken, delivering a hawkish surprise, and equity markets in Europe are down across the board as a result. The countdown to the close starts right now.
The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
All right, let's get a check on the markets. 30 minutes to the close of trading in Europe. Of course, it is ECB day. The ECB may be accelerating, but maybe not accelerating its stimulus exit. Christine Lagarde trying to push back on a market that took the decision out of the Governing Council today as very, very hawkish. How that is shaken out in the equity market is a down day after the big rebound of Wednesday. The Stock 600 right now is down about 1.6%, so off of session lows, but still deeply in negative territory. The bigger reaction really was in the FX and bond markets. In FX, you initially had a stronger euro. That has now turned to weakness, once again down against the dollar by around 0.5%, trading right around that 110 level. And then in the bond market, a big reaction across the board, but more so in the periphery. A massive spread widening today with the 10-year BTP yield up 23 basis points at the moment to 191. And if only the ECB were the only big event we had to watch today, we also got U.S. CPI data out a couple hours ago, right in line with estimates, but you're still seeing some reaction to that showing up in the bond market and the equity market here in the U.S., where the S&P 500 right now is down about 1.3%. As for that bond market reaction, yields higher across the curve. The two-year yield up about 4 basis points to 171 or so, 172. And interesting action when it comes to oil, continually volatility in the commodity complex, guys. It weighs the impact of the war still raging in Ukraine. Right now, WTI crude is up about 1.2%. We are just south of 110 a barrel, Guy.
Well, Kaylee, you talk about the ECB. Christine Lagarde, having delivered that press conference right here at the ECB in Frankfurt, is now traveling to Paris, to Versailles, to meet with European leaders who are gathered there. The message I suspect that she will take is that we are going to need some sort of a fiscal response. But I wonder whether actually that fiscal response is top of mind for those leaders right now. According to the Prime Minister of Estonia, Russia has no diplomatic will to resolve the war in Ukraine right now. So I suspect that's firmly the focus. He is calling for more action from the West, more action from Europe. He spoke with Bloomberg's Maria Tadeo.
I think we have to give hope to Ukraine and some really clear political signal that they are part of the European family and they have a way to Europe, because they are literally fighting for Europe right now. So this is we need to give them some kind of message.
She, not he. Right, Maria Tadeo joins us now from Versailles in France, where EU leaders, as I say, are meeting to talk about the war. Maria, that was a fairly bleak message. Let's talk about what we're going to hear from EU leaders. Clearly, they are focused on how to resolve this war. They're figuring out how to deal with the implications of this war. Talk us through the agenda. What are they going to be discussing?
Well, Guy, of course, this is just about Ukraine. This is a summit that essentially hinges around the crisis in Ukraine, particularly after this meeting that we had this morning between the Russian foreign minister and the Ukrainian foreign minister. Guy, I watched that press conference, and watching Sergei Lavrov, it was like watching a man who really did not see what's happening in the country for 2 weeks and was almost acting like nothing is going on in Ukraine. You know, he said this is not a war. They continue to say it's a special military operation. He talks about, quote, liberating territories of Ukraine. Now the Russians are floating that based on information that they say they have gathered in these liberated territories, allegedly, is information about biological weapons between the United States and Ukraine. So this is a Russia that clearly is operating like a war is not happening. But this also could have been a pre-recorded speech 2 weeks before the war. Not a lot has changed in the talking points of this country. Of course, when you hit that wall, the question is, what can European leaders do? We haven't seen from Vladimir Putin. He's not really been engaging in a meaningful way. And again, the Ukrainians continue to say, we can talk about a number of things, but we're not going to surrender and we're not going to give in to the capitulation that the Russians are hoping for. So at this point, Guy, if you ask me, is there a diplomatic solution to this? I frankly don't see one for the time being.
which raises a lot of question marks about the eventual full impact on the economy of both Russia and as well the European Union. Thank you so much to Bloomberg's Maria Tadeo. And on that subject, that is something that the ECB is contending with, and officials are calling the war a watershed moment for Europe. It's forcing rising prices even higher. We saw that reflected in higher inflation forecasts. Take a listen to how ECB President Christine Lagarde spoke about those challenges earlier today.
We had very intense discussions about the current economic situation. The war of Russia against Ukraine has tainted and overshadowed a lot of those discussions. GDP growth has been revised downwards for the near term, owing to the war in Ukraine. Inflation has continued to surprise on the upside because of unexpectedly high energy costs. The Governing Council sees it as increasingly likely that inflation will stabilize at its 2% target over the medium term. The war in Ukraine is a substantial upside risk, especially to energy prices. We tried to have as much optionality in order to deal with the situation. Maximum optionalities in the face of maximum uncertainty, but also delivering on our mandate, which is price stability. We're not talking about accelerating. We're not talking about tightening. We're talking about normalizing. The Russian invasion of Ukraine is a watershed for Europe.
With us now to analyse what happened today here in Frankfurt is Jean-Claude Trichet, the former ECB president and the European chairman of the Trilateral Commission. Jean-Claude Trichet, the market has taken what we got from the ECB today as an indication that we are going to see an acceleration of the exit from the extraordinary measures that have been in place for the last few years. Was that your interpretation as well?
I think that market reaction is understandable because the new decision of the ECB was not clearly anticipated. I think that it was naive to think that the ECB would do nothing when the inflation projections were augmenting quite considerably from 3.2% to 4.1% over quarter to quarter, if I may. So it was really something which was clearly in the cards, but the Governing Council, and I take it that it was an intense discussion, as Christine Lagarde said, took, in my opinion, a good decision because it was based on collegial wisdom, which is more important than ever when you have such a balancing act. You have the war in Ukraine, you have the push on inflation, which was already before the war very, very big. Then it's a good decision, in my opinion, because it is clearly based also upon flexibility, adaptability, and it seems to me that in such situation you have to be alert. Alertness is of the essence. And it's also good because the most important for the ECB is to stabilize as a point fix, a fixed point, the inflation expectations medium term, which today are reasonably stabilized at 2%. So
Okay,
it was very
so-
important to be sure that it would remain a fixed point, yes.
So, Jean-Claude, earlier we were speaking with Peter Praet, who, of course, was the former chief economist at the ECB. He said he didn't think that the tweaks they made today were actually necessary. Do you view this decision as a necessary move in this current economic environment for Europe?
Yes, indeed. I trust that it was a good decision for all the reasons I mentioned, also because it is based on alertness and flexibility. We don't know yet what will happen in the third quarter of this year and, of course, of the fourth quarter of this year. On the other hand, you cannot have a central bank immobile when you have a level of core inflation at 2.7%. Core inflation, not headline. Headline is very high now, of course, at 5.8%, but core. And core, I would say 12 months ago, was at the level of 1.1% in February last year. So you see clearly, I think it's good for all partners, all, I would say, parties concerned, that the central bank says my fixed point is anchoring inflation expectations around 2%. If they had done nothing, it seems to me that they would have taken some risk there.
Jean-Claude Trichet, in the past, Christine Lagarde has fallen foul of the Governing Council and the markets by suggesting that the ECB is no longer in the business of managing spreads. Given the fact that we now have this inflation challenge, can we now finally say that the ECB is no longer in the business of managing spreads?
No, I wouldn't say that. I would say that the ECB is by treaty responsible for anchoring inflation expectations for all the euro area and for delivering on that over time, which it has done very, very well, I would say, in the first 23 years of the euro. On the other hand, it has to care also for transmitting the monetary policy to all part and parcels of the euro area, which means that some attention must be given, of course, to the correct transmission of monetary policy. But what we are mentioning there is really the necessity to be sure that inflation expectations are anchored, which is good for growth, of course, good for the people of Europe, good for the European citizens. It is the responsibility of the central bank. It is a credible central bank, and I'm sure that it is, because of this decision, will preserve its credibility and remain fully credible.
Well, Jean-Claude, let's talk about the relationship then between monetary policy and fiscal policy. Will the ECB be able to normalize policy to fight higher inflation if fiscal policy doesn't come in to support a European economy that could be heading potentially towards recession territory?
Well, we are far from recession territory, fortunately. Of course, we are in a totally uncertain world. What will happen in Ukraine is absolutely key. What will happen in terms of spreading of absence of confidence, not only in Europe but also the world over, is something which is also very important. But when I look at the last projection of the ECB staff, I see a growth of 4.2% this year, 2.9% next year, 23, and in 24, still 1.6, and highly unfortunately, 1.6 is probably close to the growth potential of Europe at this stage, taking into account the lack of structural reforms. So I don't see that we should be too alarmed. To be clear, I don't think that stagflation is round the corner. I think that we have to continue to have a reasonable central bank. And of course, the central bank is not alone. It is not the only game in town. And I take as very important the message to the other partners. You have also your responsibility to be taken into account very seriously. It is very important. And the other partners are not only the governments, not only the fiscal policy, but also social partners in general. I would say the private sector itself, which should be very keen on not augmenting the second round effects that are associated with, unfortunately, this price of oil and commodity which is picking up.
It's been surprising that maybe we haven't seen those second round effects, certainly in Europe, in the way that we've seen in the United States. Jean-Claude, can we just talk a little bit about where you think policy will go, not just in the short term, but maybe in the medium term as well? 5 years over the last few days, ticking up beyond 2%. Where do you think the terminal rate will be for the ECB? How high do you think rates will have to go in order to continue to meet the mandate?
First of all, I think we have to look at all projections, of course, as regards the inflation expectations. If I'm not misled, the survey of professional forecasters is still at 2%. I understand, but I had no time to look very carefully at the projections of the staff, but I understand they consider in 26 they would be around 2% also. The market itself goes up and down from time to time. It has to be followed very, very carefully. But I would say, in my eyes, at the moment we are speaking, inflation expectations are correctly, medium-term inflation expectations are correctly anchored. It has to be preserved, as I said. It is the duty of the central bank. It is of the essence. In the medium and long run, we will see what happens as regards both the real interest rates and the nominal interest rates. It's clear that real interest rates are likely to pick up, in my opinion, the world over, in the US, in Europe, and in the rest of the world, for many, many reasons, including the green transition. That's one. And then, of course, on top of that, you have the inflation, and you can compute easily real plus inflation equals nominal. So we have to expect increases of interest rates the world over, and of course, in the US as well as in Europe. But in Europe, the inflation expectations are correctly anchored, in my opinion. It is a question of preserving this anchoring. In the US, clearly, they are not correctly anchored, and clearly we are in a different universe.
All right, well, we will leave that on that note. Thank you so much for giving us some of your valuable time today. Jean-Claude Trichet, former ECB president. We appreciate it. This is Bloomberg. Let's get more on that surprise move from the ECB today. It accelerated its winding down on monetary stimulus. Maybe. Christine Lagarde said that's not exactly what they're doing, but that is definitely how the market is taking it. Joining us now to discuss the market reaction is Sandrine Perret, Vontobel Asset Management fixed income strategist. Sandrine, you are seeing yields moving higher on the back of this. We're up only 5 basis points on the 10-year Bund yield, 23 basis points on 10-year BTPs, a very dramatic spread widening. How did what you heard today make you rethink about what your view is on rates markets in Europe?
Yeah, that's a good question. So we have seen after the ECB announcement that they will, close QE earlier than previously expected. Indeed, yields are rising massively. I would still point at looking at real yields in Europe, which had been, heavily impacted last week, because inflation expectations were rising. And on that front, you have to also keep in mind that these real yields are now also rising, but they still remain very, very low by historical standards, even after the ECB decisions.
Sandrine, do you think we get a rate hike in 2022 from the ECB?
Well, I think for now they really keep, the door open. As Lagarde mentioned many times, they are data dependent. It seems that also with the QE decisions, they have also pushed back a bit expectations for rate hikes, and that's also an important factor for yields in Europe. But altogether, the situation in Ukraine is really what they will assess currently. The rate hike is still a possibility, but it really depends on the growth outlook in Europe for the time being.
Well, on the subject of the war in Ukraine, how much could that actually act as somewhat of a cap on yields in terms of a haven bid going into bonds?
Well, that's actually exactly what we observed last week, when you had this really peak of uncertainty, regarding the crisis in Ukraine. Actually, bond yields fell across the board, not only in Europe, but also in the US. So, short term, the safe haven aspect of bonds remain. That said, you also have to put that into the context of, much higher inflation than in the past. For central banks, they have to take financial conditions, altogether. They are still easy, but any tightening would have to be monitored in the context of probably a negative growth impact from the war in Ukraine on Europe and from higher energy prices.
Sandrine, how wide did Bunds versus BTPs get, or BTPs versus Bunds get? Italy is one of the most exposed countries when it comes to Russian energy. It uses a great deal of it. It comes into this situation with very high debt levels, and we are now no longer going to have PEP or the APP program to support its bond market. What do you think is going to happen with BTPs?
Well, I think BTPs are indeed the weaker link in Europe, and also within European, the bond space. As you mentioned, they will be impacted by the three impacts. So first, the energy impact that will have, a growth impact on the Italian growth, and the other aspect is the ECB exiting quantitative easing, and that, in isolation will also push Italian yields higher. That said, remember that ECB will also try to, avoid having fragmentation, within the euro area bond yields, and I think here that's probably where they would not leave BTPs rising to levels that would endanger the stability of the banking sector in Italy, for example, or credit conditions in Italy, putting, massive negative impact on growth in the country. So I think all these things would mean that we think, BTP's yields could rise, but they have already, increased a lot since the beginning of the year.
Yeah, it's going to be interesting to see how the reinvestment program works. Sandrine, thank you very much indeed. Sandrine Perret, Vontobel Asset Management Fixed Income Strategist, thank you very much indeed. This is Bloomberg.
After the best day for stocks here in the U.S. since 2020 yesterday, it is followed by a down day today, and the losses are just growing as the session grows older. Right now, the NASDAQ 100 is down 2.4%. Big tech really leading the decline. S&P 500 off by about 1.5 percentage points. Of course, in the bond market, reacting to that CPI print that did come in right in line, but at a 40-year high of 7.9%. As a result, the 30-year yield up 4.5 basis points to 238. That is the highest going back to May of 2021. At the same time, that was not the only economic event of the day. You also had a hawkish surprise out of the ECB, at least how that is how European markets are taking it. Even as Christine Lagarde says, it's not an acceleration of the stimulus exit. Right now, markets are down across the board, 1.5 on the FTSE, 2.8% on the DAX. So you have a lot of the auto companies underperforming today, while the CAC 40 in Paris is off by around 3 percentage points. Of course, we will have more on the European close next, what the sectors and individual stocks are doing. So stay with us for that coverage coming up. This is Bloomberg. Stocks are finishing up the day in European trading, and of course, it's not just any day. It is ECB day, and also the day after the best day for stocks going all the way back to 2020, and yet we follow that with a down day really across Europe today. We have the CAC and the DAX each down 3 percentage points. We're off about 1.5% when it comes to the FTSE in the UK, so a little bit of outperformance, relatively speaking, there. But the FTSE MIB, the big laggard in Italy, down more than 4%. Obviously, that probably has a lot to do with the fact that you're seeing yields blowing out in Italy. More on that in just a second. To go through the stock story, though, that ECB decision, of course, coming around 12:45 London time. You can see that the stock 600 was already on a downward trajectory going into that decision. Then we saw a leg lower. We recovered some. Now, though, we look to end the day just off of session lows. The stock 600 off by about 1.8%, broadly speaking. But as for the reaction cross-asset to that hawkish surprise from the ECB, Christine Lagarde says they are not accelerating their stimulus exit, but the idea that the APP program could end in the third quarter really reflecting across asset classes. At first, you initially had a stronger euro that quickly turned to weakness. It is now weaker against the dollar by 0.6%. We are sitting right smack at that 110 level. And in the bond market, yields moving higher, but way more so in the periphery. The 10-year German bond yield is only up about 6 basis points, sitting right around 0.27%. But in Italy, that 10-year BTP yield is up by 24 basis points, just south of 192. Now, as for what the sector breakdown is looking like when it comes to the equity picture, only one is in the green when it comes to the stock 600. Maybe no surprise, that is basic resources, as you're seeing some of the metals prices rebounding. A lot of volatility in the commodities complex for sure. Basic resources up about 1.25%. Interestingly, you have banks down near the bottom, even as the market is pricing in potentially a hike back on the table of 25 basis points for the ECB come September. You also have technology and retail at the leading the losses here, and it is autos and parts, the big underperformer, that down 4.8%. Of course, for that sector, there is the issue of supply chain issues being exacerbated by the war in Ukraine, Russia exposure as well. But one stock in particular also creating a drag is BMW. That automotive EBIT margin, really a problem when they delivered it earlier on. That stock is down 5.6%. Semiconductors, of course, still a big problem for these players across the board. When it comes to Russia specifically, Carlsberg, the biggest beer brewer in Russia, had to say it basically cannot give a forecast for the year due to that uncertainty. It may have to write down its Russian assets. That stock is down 5.5% as a result. And finally, Deutsche Bank, Guy, at one point, this stock was down 8%. There's some Russia exposure issues there as well. But we heard from Christian Saving outlining his strategic plan, upping revenue targets, upping return on equity targets, also potentially returning $9 billion in payouts to shareholders. So that stock ending the day well off of session lows, only down by about 0.9%. Of course, that's the banking story in Europe. We also heard from the banks here in the U.S. Goldman Sachs, Guy, the first on Wall Street to pull out of Russia.
So it's going to be interesting. You bring up Deutsche. It's going to be interesting to see what Deutsche Bank does. As you say, last night the bank quantifying some of its direct exposure to Russia. Let me just check my notes. 0.3% of the loan book is the direct exposure, but the second and third round effects could be really quite significant. And while Goldman Sachs doesn't have a big footprint in Russia when it comes to its staff, Deutsche Bank in some ways does. Has around 1,700 people in Russia. Now around 1,500 people of that 1,700, Kayleigh, work in a technology center. And it's going to be really interesting to see ultimately how Deutsche manages that process. Obviously, it still has clients in Russia. It's still having to manage for those clients some of the interbank dealings that are necessary, for instance, just simply to make payroll. But that effect of the war on the banking sector has been really quite extreme. So as you say, Deutsche holding its investor day today. That gave me an opportunity to catch up with the bank's CFO, James von Moltke. We started talking about this exposure, how the financial fallout, the mechanics of managing staff in Russia are going to work going forward from here. Take a listen to what he had to say.
We've been very focused on initially the first order impacts. We think, as we disclosed last night, we've got those very well under control. Very modest exposure altogether from a credit perspective on a net basis, about 600 million. And then from a market risk perspective, we were defensively positioned and have managed, I think, quite well through these early days. As you say, the second and third order impacts of this crisis are harder to judge. Literally, as of today, we feel comfortable that we've got those second order effects contained, and we're doing work with our first line and risk organizations to understand together with clients what the long-term ramifications might be.
You have, just to stay within the bank for a moment, we'll talk about the clients in a couple of seconds, but you have circa 1,700 people in Russia. 1,500 of those work within an IT center, a tech center. How are you managing those people? How are you managing the connection between that IT system and your IT systems elsewhere?
Well, look, this is a situation that, while no one could predict exactly the circumstances, obviously we've been aware of this potential risk for some time. We'd taken steps over several years to manage down that risk, including terminating contracts with external providers. Now, as we're looking at the situation, we're being very proactive. As we've said externally, we've conducted some tests. This center, incidentally, is really not engaged in managing our production systems. And so we're able to operate the bank in terms of our production systems without need for the support from that tech center. And as I say, we're being very proactive about defending from potential cyber risks generally, but also with respect to our exposures there.
It's been a very busy start to the year. How has the bank performed in the last couple of months? Has it performed above or below expectations? We've seen obviously a significant repricing in terms of Fed, ECB expectations. We've now got the Ukrainian situation, the Russian situation to deal with as well. What impact is that having on the bank? What have you seen over the last couple of months?
Well, look, we're very pleased to share with our investors this afternoon sort of an indication of how we've traded and managed through the first 2 months of the year. I think the critical message is we're on track, delivering against the promises that we made 3 years ago, and we've continually updated the markets about is how we've been positioning the company to meet its financial targets for 2022. First 2 months of the year have been quite successful for us. We're at or above our plans in all of the businesses. So revenues in line with or above plans, better than prior year. And the expense trajectory that we shared with investors in January, we're on track to deliver against. As you say, the markets have been dislocated in a number of different ways. In the early part of the year, as people look towards a tightening cycle, potentially more accelerated even in Europe than we'd anticipated, and now we've gone through a period of real volatility, and it's a credit to our people that we've been able to manage through that, I think, really successfully, and importantly, support clients in this time.
Well, let's talk about the clients. How are they managing the situation in Russia? How many of the clients have already withdrawn? Those that are staying? How do you help them in this kind of environment? Obviously, we've seen significant changes to the SWIFT system. How do these clients manage even basic things like payroll? Is that still possible? How does it happen? And how, as you manage that process, do you manage risk for the business?
Well, listen, it's complex, and we've been extremely tightly coordinated and across the bank. I think, again, to the credit of our managers, of our client service people, we opened a help desk essentially day 2 of this crisis to hear inbound questions and advise clients on how they should respond. There are a number of different dimensions. One is, of course, payments, and they need to manage their payment situation, but also essentially restructuring their operations to be stable in a post-sanctions world. We are present in Moscow to support our clients. We're largely there sort of in support of multinationals. And of course, as they adjust their business models, we adjust the services that our service footprint, if you like, adjusts with them. And then finally, the market risk. We've been able to create markets to help clients, both institutional and corporate clients, manage their exposures, their risks associated with this recent crisis.
So the market basically took the news from the investor day quite well, Kayleigh, as you suggested, the share price turning around as the day has progressed. I'm really fascinated to see as well as to how the rates environment and the changing calculation around that is going to impact the European banks. Clearly, the European banks have had a real turnaround over the last few weeks. Started the year really strongly, fading as a result of the Ukraine crisis. But now we've got the ECB looking like it's going to be potentially raising rates maybe earlier than we thought. What impact is that ultimately going to have on this sector?
Yeah, absolutely. That was part of the bull case for European banks coming into this year, Guy, the idea that we were going to see rates lifting off at some point, and that would be a boon for these stocks. The market has repriced this time and again, but once again, that 25 basis point rate hike back on the table for September after the ECB decision today. So we'll have to see how that reflects in bank stocks as we move forward. As for where European stocks are in general, as we head to the break after the European close, we have settled out, and it is a down day broadly after yesterday's rebound. The FTSE 100, the relative outperformer here, only down about 1.5%. I say only, but a lot of that has to do with its exposure to materials that are doing a little bit better as metals prices rebound today. When it comes to the DAX and the CAC, each down the better part of 3%, though it really was the FTSE MIB that was the big laggard on the day. Now, coming up, the fate of one of the best-known football clubs in the world is up in the air after sanctions were imposed on its owner. We're going to go out of my football territory into Guy's football territory and discuss the future of Chelsea when we come back. This is Bloomberg.
This is Bloomberg Markets, the European close. I'm Ritika Gupta, and you're looking at a live shot of the principal room. Coming up, Ryan Peterson, the Flexport founder and CEO, joins Bloomberg Television at 5:30 p.m. New York time. This is Bloomberg. Let's check in on the Bloomberg First Word News. I'm Ritika Gupta. The latest attempt at diplomacy in the war in Ukraine appears to have gone nowhere. The foreign ministers of the two countries met in Turkey in their first discussion since the war began. Ukraine's foreign minister says Russia indicated it would continue attacks until its demands are met, and one of those demands is surrender. The U.S. House has passed a spending bill that funds the government and provides $13.6 billion to respond to the war in Ukraine. The money will help pay for weapons and aid to refugees. Lawmakers from both parties expect more funding eventually will be needed. And in the UK, competition for employees is driving up those wages. Starting salaries for permanent staff climbed February at the second fastest rate on record. A new survey from KPMG and the Recruitment and Employment Confederation finds that job vacancies are opening faster than firms can even fill them. That gives bargaining power to workers who want to be compensated for those soaring prices that we are seeing. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Guy.
Ritika, thank you very much indeed. So it has now happened. Roman Abramovich, the owner of Chelsea Football Club, has been sanctioned by the UK. Effectively, for Chelsea Football Club, this is a huge blow. It basically means that it can play players, but it can't engage in the transfer windows, can't buy or sell players. If you're a season ticket holder, you can go to the game, but you can't buy new tickets to go to another game. So season ticket holders can go. Other people now can't buy tickets to watch Chelsea play, assuming that they're at home, of course, at Stamford Bridge. Now, I think Chelsea's playing Norwich tonight. I think that's at Carrow Road up in Norwich. But I think they've got Newcastle at home, Stamford Bridge at the weekend. Joining us now to discuss all of this, Bloomberg Quick Takes, Alex Webb. Alex, just walk through the implications of what this means for Chelsea, what it means for Roman Abramovich, and what it means for their relationship going forward.
So what we know is that they can't, as you say, accept money for a whole bunch of different things. They can pay their players, but the issue is if they can't receive money from, say, new ticket sales or even from broadcast revenue, which they can take, but it will be frozen as soon as they receive it. How are they going to be able to afford those players? This is a club that makes considerable losses, has all been bankrolled by Roman Abramovich for the best part of 20 years and made losses in excess of £150 million last year. Admittedly, that's a COVID year, but nonetheless, they did have this big pile of cash from their billionaire owner they're allowed to sit on. For Abramovich, it really was an asset which bought him a certain amount of legitimacy in London, but latterly it became a risk. When parliamentarians stood up and said, we need to crack down on the oligarchs, the one oligarch they name is Abramovich, because you go up to any Briton on the street, ask them to name an oligarch, it will be Roman Abramovich because of Chelsea. So what used to be an asset became a risk, and perhaps is one of the reasons that he is top of the list of targets.
Alex, just quickly.
Yeah, I think it makes the Newcastle game quite interesting. Sorry, Kaylee.
Well, can he not sell it now effectively, Alex? I mean, what happens now?
So I think he is not allowed to carry on with the sales process as it stands. He's, commissioned some bankers to find him a buyer. Among the potential buyers named is Josh Harris, founder of Apollo Group. But the government at this stage is going to be responsible for selling it. Now, if they're able to find a buyer before the summer, and that's a very big if, then maybe they can think about doing transfers and things. But, who has the money to buy this sort of thing? This is going to cost, assuming it's going to get the price that he was looking for, billions of pounds.
Alex, great stuff. Thanks for the update. Alex Webb from Bloomberg Quick Take. Thank you very much indeed. We'll see what the result is at Norwich tonight. Could be an interesting evening for Chelsea Football Club. Let's talk more about this now. We welcome Tyler Kustra, University of Nottingham, Assistant Professor of Politics and International Relations, a specialist in sanctions. Just talk us through the effect, if any, of this move against Roman Abramovich. How does sanctioning Roman Abramovich and the oligarchs and the Russian billionaires help the process of peace to be found in Ukraine? Can you just walk me through this? Because I'm really struggling with this as anything other, as maybe Alex hinted at, a domestic signaling mechanism.
No, you see, I would suggest that if you look at when the US put these people on their sanctions list previously, and when the UK government put them on the UK sanction list just a few hours ago, the point was these people, they say, have deep connections to the Kremlin. And so by sanctioning them, you put pressure on Putin, because when all of Putin's friends are angry at him, when everyone who keeps Putin in power is angry at him, then Putin has to recalculate whether or not he wants to keep on this war. And so I don't want to say any particular person on this list has a direct influence over Putin. But what I will say is that Putin is kept in power in general by the oligarchs. And if the oligarchs are angry with him, the oligarchs will seek to replace him.
And yet it doesn't seem that the sanctions on oligarchs that started to be put in place some time ago. It took a lot longer for these to come through for the likes of Deripaska and, of course, Abramowitz, Tyler. It doesn't seem to have influenced Russia's calculus at all. They haven't pulled back at all. It's just accelerating the campaign. So when would you expect for that effect to actually take hold?
Well, you know, we sit down and we say we've sanctioned some oligarchs. Currently, we've sanctioned 41 people over the Ukrainian war in the UK. Meanwhile, the EU has sanctioned over 600. The US has sanctioned over 200. The UK needs to catch up with the EU and the US and make sure that sanctions are applied to these people in every developed country. So we want to put pressure on them, and we want to be in a position to say, look, now we've applied this pressure uniformly. Now there's nowhere to hide. And then they can go to Putin and say, look, you have to fix this.
My understanding was that while the oligarchs used to have significant influence over the Kremlin, we're now in a position where the Kremlin has significant influence over the oligarchs. Is that relationship still one that is worth pressing on? Do we know, before we do this, the influence that they have? I'm just wondering if this is something that is based on supposition or actual facts as to an understanding of the relationship.
Well, you know, again, I can't say specifically this person has this quantifiable level of influence over Vladimir Putin. What I can say is, you know, Gazprom, Rosneft, their top people were just sanctioned today. We obviously know that Putin cares a lot about those companies. We obviously know that Putin, you know, wants to make sure that the people he has in charge of those companies are his allies. And so, again, can we quantify how much influence they have? Possibly that might be difficult, but we can certainly say overall the oligarchs are ones that Putin needs to keep happy. If every single Russian oligarch is angry at Putin, then Putin has to be calculating how quickly he wants to end this war.
What about calculating the end of sanctions, Tyler? Can sanctions be effective if the governments imposing them don't outline what it would take for them to unwind?
You know, absolutely, sanctions should be contingent. Any punishment that isn't contingent, that doesn't sit down and say, look, we're willing to take it off if this ends, has problems. At the same time, I think it's pretty clear why the UK government, why the EU, why the US are sanctioning these people. And I haven't read the legislation. Perhaps there aren't specific conditions attached to it. But I think in general, it's considered to be contingent. That is, once Russia stops attacking women and children in Ukraine, once it stops shelling hospitals where women are giving birth, once it ends this terrible military adventurism there, we will take off the sanctions. Sanctions should be contingent so that they're a punishment. And when the bad behavior stops, the sanctions should stop.
And so that there is potentially an off-ramp available. Thank you so much for joining us, Tyler Kustra, University of Nottingham Assistant Professor of Politics and International Relations. We appreciate it. This is Bloomberg. A lot has happened in the last 24 hours. Talks between the Ukrainian and Russian foreign ministers in Turkey yielding not much progress, an ECB decision and U.S. CPI that came in essentially in line with estimates. It's been a big day, and there is still more ahead in the next 24 hours. On the earnings front, we'll get Oracle and Rivian overnight. U.S. budget statement will be coming at 2 p.m. Eastern time today. President Biden will also be meeting with the Colombian president. And as for tomorrow, EU leaders will be meeting for a second day in Versailles, France. Of course, the crisis and war in Ukraine front and center on the agenda, and how it feeds into inflation as well. We'll be getting some CPI data out of Spain and Germany tomorrow, as well as economic data here in the U.S. with the University of Michigan Consumer Sentiment Survey. Out of Ukraine, we will also be getting GDP data. Plus, it is the final day of the China Nationalist People's Congress that has been going on in the background. That's all ahead in the next 24 hours, but coming up in just moments on U.S. TV and radio, Larry Culp, GE Chairman and CEO, will be joining Balance of Power with David Weston. That's here in the U.S. When it comes to the UK and London, DAB Digital, Guy, live from Frankfurt, will be hosting The Cable. That's at the top of the hour, 12 p.m. in New York, 5 p.m. in London. And of course, we have to check on the markets as well. We are off of session lows, but still down hard when it comes to U.S. equities. As technology underperforming, the NASDAQ 100 is off by about 2 percentage points. Bond yields on the move up after that CPI data. The 10-year yield is back at 2%. From New York and from Frankfurt, this is Bloomberg.